What's up, YouTube? And what's up, Facebook? All y'all in the house right now. Oh, man, we got some news. You guys would not believe it.
Oh, we got some big news. You
would not believe it.
No, about 4 or 5 sets of really
I don't even
good.
want to say it yet. Let's hold back.
All right,
Let's hold back.
You want
Let's
me to
wait till
hold
this
back?
room is full and
Well,
we'll let the world know.
I can't imagine how much. One, I think this is going to be bigger than you and I can even imagine.
Oh, huge.
Because you know how much we turn away?
Huge.
Better.
Huge.
No, you can do better than that.
Huge.
Come on.
Huge.
Huge. We got some good news, and I've got some take. I think that's the best way to say it.
Okay.
Take on what's going on with the Federal Reserve.
Okay.
Because Fed spoke 31st, and there's what they said, and then there's the undertow, which is everybody's looking for the undertow. So we're going to get to that.
Okay. Everybody, just so you know, our numbers are right here all the time. Screenshot it if you need to get a hold of us. Numbers are always there, okay?
Pull up the rates.
Pull up the rates.
I'm actually kind of fascinated to see what happens with the rates right now.
It's weird.
Well, because the market went down because the Fed said, we're not so concerned and we don't think things are, and they're still there. They're still down. Look how low they are. That's crazy.
How low can you go?
That is crazy how low the rates are. It's crazy. Should we share it with you guys? Should we?
I think
Tell
we
us
should
where you're
wait.
at. Tell us where you're at and we'll share it with
City
you.
and state, guys. City and state. And it stopped raining in California. How's your weather?
Okay. So, KDZ just joined. What's up, guys?
What's up?
So, hey, New American Funding right now, is putting out the interest rate on an FHA loan, 5.375. 30-year fixed, 5.375. 5.375. Oh my God.
You said it.
Oh my God, that's great. Now that's a perfect scenario. And if you don't believe us, you can go to the top. There's a link thing and you'll see cool stuff. And there you actually get the quote from New American Funding. That's not your quote, by the way. The only way I can give you your quote is if I pull your credit, calculate your income, put in your assets, and then build a file for you. And I can give you your quote. But right now, New American Funding is putting out a 15-year fixed at 5.25. Now, here's some very important stuff that you guys need to know. First off, we've been saying, Chris and I have been saying, that we don't believe the full correction is going to happen till the third quarter of 24. We've been saying that for about 6 months.
Yep.
Third quarter of 24. That's crazy.
Insane in the membrane.
Third quarter of 24.
I'm sorry, I don't want to be rude. If you guys want to get a hold of us, screenshot. The phone numbers are always right here, guys. Always right here. Just screenshot
I don't think
it.
they can see it from that far, man.
Screenshot it. Yeah. Zoom in. I'll make bigger ones.
Yeah,
I'll make a bigger phone number for you guys.
This is right. Can you get this right?
Zoom in.
Can you get this right? So the Fed spoke on the 31st. And we all everybody knew. The odds makers in Vegas said, hey, he's not going to reduce the rates. Remember, there's a cycle. It goes up and it goes down. It goes up and it goes down. That's our economy. Once you understand it, you just follow the cycle. So we are at what's called the peak. And then we're at the pause because the Fed really powers a lot of stuff. It's not so evident, but he powers the Fed, not he. The Fed powers a lot of stuff. Jerome Powell speaks for the Fed, but it powers a lot of stuff. And the Fed's goal is to get inflation to 2%. And they don't care how they do it. They don't care if we got to lose jobs. They don't care if people are going unemployed. They don't care if you can afford a house. They don't care if we make a living. They don't care. They have to get inflation to 2%. And how are they going to do that? Well, they do that by unemployment rate, CPI, and a whole bunch of other factors. But here's what they're afraid of, and Jay Powell said this in this meeting. He said, listen, if we start to cut rates in March and we don't make the 2%, we run the risk of getting stuck at 3% or whatever the number is. He didn't say 3%, but he says we run the risk of getting stuck at a higher number. And if we get stuck at a higher number, we would have to really, really increase the pressure in order to bring it down to 2%, which means bring interest rates back up. So instead of doing that, what we're going to do is say we're not willing to commit to anything, and it does not look likely that anything will change by March. What? What? Because the next meeting's in March. Now, we all kind of knew that the first meeting was going to be a pause. That's where we're at. But odds makers went from like 70% that we're going to cut rates in March to all the way down. It's like 30% right now. And I even think that's high. I think that's ridiculously high because the way the Fed was speaking, they're more concerned with the long game of getting inflation down to 2% than they are with you being able to afford a house today. So we don't think those cuts are coming in March. Don't think it's happening. I've been saying for the last 6 months, I don't think the real pivot's happening until the third quarter. Once the third quarter comes around, I think the market's going to scream. I think real estate's going to be on the market. I think people are going to be buying houses. Now, what does that do for us today? That actually poses a great opportunity for you right now if you're buying a house. Why? Because we're not saturated with buyers. And as soon as the rate...
It's coming, guys.
Well, we get a lot of applications right now. We're getting tons of applications. But we're not saturated with buyers right now, which means it's still a buyer's market. And as long as it's a buyer's market, you're able to negotiate the terms. You can say, hey, listen, I'll give you full price, but I need you to pay closing costs. You can say that. And you might get away with it in most markets. But as soon as it becomes a seller's market and there's like 10 buyers, the minute you ask for closing costs, they'll say, bye, go home, have a nice day.
Yep,
it's over.
That's accurate.
It's over. I know we got a lot of questions.
What's up, Tony from PA?
What's
Pittsburgh?
up, PA? So we're on Facebook, Instagram, TikTok, and YouTube. We appreciate you guys. Go ahead. We got a lot of questions.
Karen Dizala, how you doing? We love you too. And you said you needed some marketing on this. What do you want marketing on? Let us know. We'll help you with that. No problem. Alfonso, woohoo! You said it. Ryan, is preying on tax lien properties a shady thing to do? It's
Ryan. Praying, I don't know if the word praying is. So here's the catch. If the taxes stepped in and took the property, because they put a lien on it, and I bought a lot of properties by buying tax deeds. And deed state, lien state, it's a little bit different. But the taxes are going to take over anyway. They're going to take the property. And actually, it's very difficult to prey on somebody if you let it hit the market. Because the market has a value. If you put it in too low, the market, somebody else will overbid it. So you're not preying. Be careful with that word, because you're not preying on people. You're buying tax liens or buying deeds. Next.
Well, so it's a business. There's actually companies that actually do this as a business.
Yeah.
So know that you have competition too. It's not just I'm going to buy a tax lien and I'll beat everybody. So there's a lot of things going on. Michelle G, how long do you have to wait to hear back from a lender on the status and the amount you're approved for?
Michelle G, are we working with us? Are you working with us? If you are, text us. Text us. We'll figure out where you're at. We got to make sure that we calculate your income. If you're working with us. Now, here's the catch, and here's the truth of it. The truth of it, okay? If you're a really good buyer and you're saying you're going in escrow today, the commission's going to drive the loan officer, whether it's us or anybody else.
It's Rocket Mortgage, dude. It's not us.
They're going to go, all right, cool. I can make a commission tonight by working an extra 3 hours. Yeah, I'll do it. That's kind of what it drives. Loan officers are driven by sales. We're driven by commission. Now, if you're like, hey, I'm going to buy in 9 months, and I've sent you a piece of my document, and I'll send you a little bit more. Can you tell me how much I qualify for? That's not a real buyer. That's not really serious about going into escrow right now. So it doesn't mean to get ignored, but if I don't have all the docs, I can't build a file. So it gets put to a side, and the next guy who says, hey, I want to buy tonight. And I say, cool, let me put your credit. Your credit is 740. Awesome, 740. Cool. Hey, Lee, I got $50,000 in the bank. I want to go in escrow tonight. You know what happens then? Both Chris and I go to work, and we make sure you're qualified in the next couple hours. So if you gave everything, we can answer pretty quick.
So here's what we're going to do, Michelle G. Here's what we're going to do. You're going to tell everyone your experience with Rocket Mortgage right now.
Is it Rocket?
Yeah, it's Rocket. Tell them your experience right now, and they're going to understand why you want to work with Chris and Lee. So here's what the second thing you're going to do. Take a screenshot of us, and there's our phone numbers. You're going to horrible. You're going to zoom in, and there's our phone numbers. That's actually pretty cool. I like
That was horrible.
I like
that. Was horrible.
Johnny K.
Okay.
Middletown, Delaware, 30-year conventional. Yes, we can do that.
Yes, we can.
Do we do? Hey,
Hey,
Jerry,
guess what?
do we do Delaware?
We do Delaware.
Jerry said we
hey,
do
we
Delaware.
got breaking news. We got breaking news. Y'all are going to be the first to hear it.
First.
Right here, right now.
First.
You're going to hear it.
First.
Nobody else is going to know
Nobody.
it. You're going to hear it right now. We just got approved in New York.
Boom.
Yup.
Boom.
We just got approved in New York. We can do loans in all 50 states. You know how many loan officers out there right now have to say, well, I do business in 49 out of the 50 states. We had to forever.
We used to.
Yeah. Now we do business in all 50. All 50. Boom.
My second favorite, Maddie. How you guys doing? She said, hola, my favorite guys.
I love that.
Camacho 94. What's up, guys? How you doing, Camacho? My, just recently bought a secondary home. How soon can I put it in my license? What's LIC? LLC and how?
LLC. Okay, so if you bought a home, if you bought it and you financed it, you got to be careful who you listen to. And even with us, you got to be careful with us. Check what I'm saying. But on most conventional conforming loans, FHA, VA, USDA, there's going to be something called a due on sale clause. Due on sale clause means if you transfer it or sell it to your LLC, the bank has the ability to call the note, which means you owe all the money right now. And they don't joke around. Once you've done that, because you don't have the leverage of the title to the property anymore. You can say, well, my LLC has it, and now they got to chase you, the LLC. It turns into a legal problem. So be careful who you listen to.
Yep.
Now, there's an exception to this, and there's a reason there's an exception. A living trust. A living trust traditionally rides the social security number of the trustor, and therefore is still the same owner. So it's a little bit of an exception, but you got to be careful with that due on sale clause. And there's a lot of guys out there right now trying to do these, what do they call them? Subject to. For some reason, it's big on social media. Hey, let's do subject to deals. I don't even need to own the property or have any cash. Yeah, but you're putting a lot of people at risk, and you don't know what you're doing. It's kind of like the quack doctors who walk around doing Botox. Yeah, you're kind of doing it, but if something goes wrong, you're not a medical doctor. You don't know how to handle this. And if you do a subject to, you can hurt a lot of people. And then you could be liable.
So what you're going to have to do is get a quick claim deed prepared and then take it down to the county assessor's office and record it. It's a two-step process.
Yeah.
Should be the same in every state.
And
Ryan,
I was just assuming that you were financing. If you bought it cash, do it today.
Yeah.
Whenever you want.
Ryan, that's how another person called it, praying and called me a shady person.
Okay.
That's a hater.
That's a hater.
That's a hater.
Dude, if you
They
want to
wanna
see some
do what
haters,
you
watch
do.
our comments.
Oh, yeah.
Oh, my God. You should see the comments. We got haters coming. For some reason, loan officers, I don't understand
Well,
why.
they want us to do what you do and they can't. That's a hater.
I want to help the new loan officers. If you're a seasoned loan officer, teach me something. Please teach me something. And if you're a brand new loan officer, sit down and listen. And you know what? I get it. You're my competitor. I don't care. There's a lot of business out there, and respect to those who have survived this long. So you got your haters coming at you. That's life. And the more successful you get, the more haters you get. We appreciate you guys on Facebook, Instagram, TikTok, and YouTube.
Michelle, did you screenshot us? I hope you did.
Dude, you got a screenshot.
Ludi Hearts. How do I pull equity out of my property to purchase another investment without a job?
Ooh, Ludi. You got to listen to me, okay? If you're trying to get a loan, all loans are based off of income. You need income. So, most people get their income from a job. However, not all people. Some people have what's called passive income. Passive income comes from investments, real estate. It comes from Social Security, comes from retirement, comes from annuities. I got a friend of mine who literally went to Vegas and won millions. He was a realtor, won millions. And he said, hey, I'm a millionaire. I'm like, badass, dude, congratulations. He said, I want to buy $1 million house. And I'm like, okay, cool. And like, okay, cool, let me see your income. And he's like, well, you've only made $100,000 for the last like 5 years or whatever, each year. Every year, $100,000. You can't afford $1 million house. And he goes, but I'm a millionaire. And I said, yeah, that's cute, but it doesn't matter. because we go off of income. So what we did for this guy, true story, we did a SPIA. A SPIA is a single premium immediate annuity. And we annuitized, let's just call it $6,000 a month. And we made that stream of income last for 6 years. So we put enough money in there so that he transfers the money from his left pocket to his right pocket and created a stream of income. There's a guideline called depleting assets. And we were able to use the SPIA in order to justify his income and get him the $1 million house. And he lives in a $1 million house today. But it didn't matter if he had a lot of money. It's based off of income. We need income.
So, Ludi Hearts, if you do find something, let us know, because I have a lot of people that ask that question.
Yeah.
And I don't know how they're able to support all these investments in houses without an income. That being said, let us know if you do. And when it comes to... So I recently dug into this for a client. This is why I'm saying this. I recently dug in, and it's the same answer that he just gave. I don't know where I was going with that, but anyway. Are you a mortgage broker?
Are we a mortgage broker? That's a good question. But before we answer it, I'm going to tell you that today's rates, 5.25%. Wait, what? 5.25%. Wait a minute. Yep, 5.25, 15-year fix. It's on the New American Funding website. If you don't believe me, go to the top link where it says cool stuff. Link there. That'll take you to the New American Funding website. And they're putting out 5.25 on a 15-year fixed, 5.375 on a 30-year FHA, 5.375 on a 30-year VA, and 5.75 on a conventional. That is not your quote. That is the rate that New American Funding is putting out to the world. In order for me to get your quote, I have to pull your credit, check your income and your assets, build your file, and then I give you your quote. Are we mortgage brokers? No, we're not. We are loan officers that work for a direct lender. Mortgage broker is a different section of the lending business. Now, the next question is, which is better? Well, they got pros and cons for each of them, and I can get to the details if you guys really want. If you really want, ask, and I'll give you the details. Next.
Juan Martinez, how much can I afford? $40,000 a year with little DTI and 670 credit score.
Well, Juan. It depends on where you're at in the country, and it's going to depend on your property tax base. But I would say you're starting 175, somewhere in that range. But I won't know until I pull your credit, calculate your income, check your assets, and then find where you live. Now, property tax base is a very big issue. Some places, property tax base, I quoted one yesterday with a 3.3 property tax base. That's huge. That's decision-making huge. So let's just say you're buying a $400,000 house. $400,000 house with a 1.2 base. 1.2 base means an extra $300 a month, somewhere in that range. But if you take that 1.2 to $3.4 thousand, that's a big difference. That drops your buying power. And the builders are dirty birdies. They play with these numbers because instead of increasing their home price, they build the sidewalks and the sewage system and the park into a bond. And that bond goes onto the tax base, and you pay for it, but you don't know you're paying for it.
So, are you mortgage brokers?
We did that.
No, are we mortgage brokers?
No.
Okay. So you sell the mortgage out?
Wait. We can broker. We do have the ability to broker.
This is two-part. This is two-part.
Okay, all right,
Catch
cool.
up, man.
All
Catch up.
right.
So are you a mortgage broker?
No.
And then the second one is, so you will sell the mortgage out?
Most banks do, but New American Funding, by and large, does not.
There you go.
That's one of the big things. So here's something about a mortgage broker. And this is okay, I'm going to get into the dirty birdie part. This is the dirty birdie part. This is the gossipy part, the inquirer part, okay? So there's money on the front end of a loan, and there's money on the back end of a loan. So when you're financing that loan, there's money. There's a lot of money in it. So let's just say it's between 3 and 5%. $500,000, we'll call it 5%. Worst case scenario, 5%. So there's $25,000 there. Guess who you pay with that $25,000? You pay the loan officer, you pay the bank, you pay everybody here. But that's the front end of the loan. If you're a broker, you can't service your own loans. So you're going to sell them. there's money on the back end of the loan. They're called servicing rights. And servicing rights can go from anywhere from 100 basis points all the way up to 600 basis points. So it's in the best interest for a broker to sell off that loan to get a big old chunk of money to, I don't know, buy their new mansion or whatever.
Yep.
So there's money on the back end. Now, is that necessarily bad? Not necessarily bad. There are some situations where you're better off with a broker. Sometimes a broker is better because their line of sales is going to be, well, I have 20 lenders. If I don't like that one, I'll just take it away.
No. They're messing with commission.
Yep. So what they're not telling you is on those 20 lenders, they have to choose every quarter how much commission they make. And some of those, they chose 300 basis points. And some of those, they charge 50 basis points. Why? Because if they know they're not going to shop you, you're not going to shop them, they'll make 300 basis points. But if they think you're going to shop them or they need to get the deal through, they'll make 50 basis points. So it's a little strange, not necessarily good or bad. You just have to understand the big system is complicated.
So Gloria Macias said she had a Rocket mortgage and her mortgage just went up.
Oh, what?
I don't know why it went up, but you're going to want to give them a call and figure out what's going on there.
So if Rocket is a issue. Rocket, I like Rocket. I don't actually hate Rocket. I like Rocket. I tell some people say, hey, what do you think about Rocket? I'm like, if you have a perfect file, you're W-2, you're probably better off with Rocket sometimes. But if you have one hiccup, like a 30-day late, if you've been divorced, if you've got a real strange income, if you don't know this loan is going to go through, Rocket might hurt you. And here's why. Rocket is a automated system, and it's all systems. They don't have a human solving things. Now, think of this. You're in surgery. If you are perfect, that robot can do everything. But the minute something goes wrong, I want a skilled surgeon to be able to fix things. So that's Rocket Mortgage. I don't hate them. I think they're a necessary part of the overall market. The reason your mortgage went up is more than likely property tax base increase. Every year you have to pay property taxes. Your property gets reassessed, and it just gets built in to the mortgage. And when it goes up, the county notifies your servicer, and your servicer increases your mortgage amount. That's usually what happens.
Yoti, Tennessee. Yes, we do Tennessee.
Yes, we
Lola
do
Christina,
all 50
Philadelphia.
states.
Yes, we
Dude,
do Philadelphia. Flatboy 321, Florida FHA. Yes, we do FHA in Florida. Gloria Macias, Florida. Yes. Chris, Oklahoma. Yes. Michelle. All right, here's the update on Rocket.
Okay, good. Tell me about Rocket.
Okay, Michelle G. You play phone tag with Rocket Mortgage. It's based on their convenience, not yours.
Oh, yeah. That's
not me saying that.
Yeah. By the way, if you want to get some kind of laugh, tell your realtor, listen, I was thinking about going with Chris and Lee or Bank of America. They will immediately chime in and go, no, don't go to Bank of America. Why? Because here's why. It's driven by the market. Mm-hmm. Bank of America doesn't have to fight to get their clients because they have people walking in the door every single day. And if you don't like their customer service, bye. Chris and Lee have to fight for your business. We have to earn it. We have to know our guidelines. Yep. We have to give you the best possible deal we can get. We have to know what the heck we're talking about, solve problems, and make sure you get into your house. It's a very competitive industry. But Bank of America doesn't have to do that. They got branches about every half mile. And if you don't like them, they're like, so you don't use us. Who cares?
Yeah, exactly.
And you know what? It drives the realtors crazy. It drives them crazy because they'll say, hey, I got a pre-approval from Bank of America. They're going to go, great, let's go shopping. Because they know what's on the other side of that.
Yep.
They know it.
They do what's best for them. Not you. Big
Cool.
bank. Whatever. Yodi, you do VA loans?
Yes, we do. In fact, I'm going to say that we are probably one of the best in the country at VA loans because we do a lot of them.
There you go.
A lot of them.
Black picture one dot. If I have a 1099 with a loss on my taxes, can I still qualify for a mortgage?
Good question. 1099. Back up. Okay. 1099, loss on my taxes. Okay. We're going to need to see everything. Mm-hmm. Everything.
Depends how big that loss is, man.
Yeah. And here's something that a lot of people don't know, but a good skilled loan officer knows. If you are self-employed or you own a corporation and you do a lot of write-offs, that'll make your income disappear. Everybody knows that.
I hear Jerry laughing.
But here's the one thing that most don't know. If that loss is through depletion or depreciation, I can add it back in, which means all the money that you told the I lost it. I get to add it back and go, oh no, you made it. And I bring it back in. So I'm allowed by the guidelines to add back in depreciation and depletion. So when you're building your taxes, keep that in mind.
Camacho, 50 states, congratulations, we did it.
50
Finally.
states. You want to cry?
A little bit.
You can cry a little
It's
bit.
all right, I'm back. Bree, what are the requirements?
Bree, real simple. You just call us, and if you want, you can just
work
go.
history.
Yeah.
That's the biggest one right now. For some
2
reason, everyone's
2-year work
coming in
history?
with under 2.
Yeah?
That's
Okay.
the biggest one that I'm seeing right now. 2-year work history, guys. If you have a 2-year work history, meaning you've had a job for 2 years, even if there's a gap, even if you didn't work during COVID, if you have a 2-year, what's that? Or you're in college. That's a perfect one. You just out of college. You're a teacher now. You're a doctor now. Whatever it may be, you guys are in good spot. Just the 2 years. There's a little bit more to it, but let's start with 2 years. If you hit that qualification, take a screenshot, zoom in. Here's our phone numbers. Call us.
Thank you on Facebook, Instagram, TikTok, and YouTube. Heart us up. Give us the balloons. Put the thumbs up. Let the algorithm know that we are trying to get you a house in 2024. Great news. We're licensed in New York now. Couldn't say that yesterday, but I can say that today. Licensed in New York. New York.
Simple 3. Can I access my equity if I have bad credit without selling?
Depends on what you call bad credit. Some people call bad credit, dude, I got 650. I used to be at 800.
That's me. I feel like I have bad credit when it's at a 650.
650. Yeah. So if you have really bad credit, most loans have an entry-level FICO score. Like, for instance, if I went to FHA with 3.5% down, it would be 580. If I went to conventional, which is Fannie Mae or Freddie Mac, it would be 620. If I went to USDA, it would be
580.
580. I wasn't quite sure. If I went to VA, trick question, no FICO requirement, no FICO on a VA loan. It's a residual-driven loan. But if you're below 580, can you get a loan? Maybe. If you got a lot of money, and you're willing to put 10 or 20% down, FHA can go all the way down to 500. But if you get below 500, we're going to have some problems. So that's why I say it depends on what you say bad credit is. Everything is relative.
And 660, guys, if you got a 660 or better, I'm going to bet money on you that you are already approved. We just have to figure out how much. I'll bet money that you're already approved. We just got to figure out how much. Yeah, like
You go bet money?
maybe 3 cents, maybe 8 cents if
All
we're
right.
really crazy.
I'm good with that.
We'll see, man. We'll see.
We
I don't
appreciate
bet.
all the
That's
questions.
illegal.
We're going to
That's
get to
illegal.
them. Facebook, Instagram, TikTok, and YouTube. We appreciate you guys. Trying to get the questions from all the platforms.
Microphone,
Yeah.
Weed.
Dude.
desk,
Dummy.
hat. Oh, look at this guy.
I got jokes.
Finally, you guys are in New York. I need a place in New York. Ryan, you live
let's
in New
get
York?
you one.
Yeah, let's get you 2.
We used to try and
10
move
million.
everybody out of New York to
10
Pennsylvania.
million, man.
Oh, you know who's going to be mad at us? New Jersey and Pennsylvania. Because we were sending all the clients to New Jersey and
Sorry,
Pennsylvania.
New Jersey and Pennsylvania.
Yeah,
you guys
crazy.
didn't support us hard enough.
Right, crazy.
Hey, Lynn, buying a house in Utah, going with a preferred lender is paying for the 2-1 buy down. Thoughts?
Yeah, Eileen, I'm about to tell you some very juicy stuff. Very juicy stuff. But you're gonna have to sit down, take a seat, and listen to this. The 2-1 buy down. Okay, it's cute. It's cute. But here's what you're doing. You're saying, hey, I'm gonna give you $10,000 right now, so that I can have a mortgage payment that's a little cheaper for a year. Okay? So that's the first part. And then it's going to go up. And I know it. By contract, it's going to go up. And then it's going to go up again. What? Okay, so now you know that. That's a 2-1 buy down 101. Now let's step back. Step back a little bit. And Jerome Powell, the chairman of the Federal Reserve, says he anticipates 3 interest rate reductions in the year 2024. We actually anticipate more in 25, but he won't say that. But he has said we anticipate 3 interest rate reductions, which means what? That means if you got in, let's just say 6%, okay? You're in at 6%. By the end of the year, it could be 5%. Okay. Well, you're paying for that 5% already with that 10,000 that you bought. But it's going to keep going down, we believe. And guess what's going to happen to yours? By contract, it's going to go up. You're going to go back up to 6%. And you think for the moment you made a gain. 2-1 buy down? Sure. To get qualified, sometimes I need it. But do I recommend it? If it was my son doing it right now, I'd think, no, stay away from that 2-1 buy down. Take that money and do a principal reduction. If you do a principal reduction and then we automatically do a refi in about a year, you're going to land up with that lower rate for 30 years anyway. But the way you're doing the 2-1 buy down, it's going to be a sugar high. You're going to be like, hey, I got a lower payment for a year, and then it's going to go up. And then wait a minute, it went up again. This sucks. I'm going to refinance. What? That's happening.
So if you guys missed what he said, here's what he said. You go to a new build. The new build said, we're going to give you $30,000 in concession. Okay, this one's for the ladies because I know how you guys are.
You're like, you're going to pick up on girls here?
They're going to say, oh, I get to have the nice floors. I get to have the nice cabinets. Don't worry about that right now. Take that $30,000 and apply it to the price of the home. So now you're buying the house for $30,000 less. Lock that in the contract. Lock that in the contract because you're going to buy the house for less. He's saying buy a cheaper house and take a slightly higher rate because later on that cheaper house is going to be able to refi and now your payment's dirt cheap. That's a better move financially. That's what he's saying. And that's how you get back at the builders, guys, because the builders are making you use their realtor, making you use their agent, making you use their loan officer, making you. Well, make them reduce the price. That's how you get back at a builder.
Yep. And by the way, if you want us to compete against your builder, shoot us out an LE. Make sure it's a locked LE, and I'll actually compete with them. I'll tell you if you got a good deal. I'd say 30% of the time we just say, that's a good deal. I can't beat it. It's a real good deal. But 60% of the time, no, 70%, 60, 70, 70% of the time I'm like, I think I can beat this. And you land up with a better rate. What? Yes. Happens.
Yodi, I'm qualified for a VA loan, but my income is about $45,000 a year. I hear income should be $100,000 plus to qualify.
Yodi, not true. Not true. It's going to depend on your purchase price. And here's the good news about the VA loan. The VA loan, zero down. That's what they tell. Everybody knows that. Every veteran knows VA, zero down. Here's the most important part. No mortgage insurance. That's the most important part. And it's not because the bank isn't secured, because banks are based off of risk. If you're putting less than 20% down, you have to buy insurance to make the bank feel secure that you're getting a good loan. But the VA actually steps in and says, hey, I'll insure up to 25%. So from the bank's perspective, it's an easier underwriting process and they have very little to lose. So it's a different loan, VA loan, very powerful loan. The only downside is the VA funding fee. And that VA funding fee can be very expensive. It can go up to 3.6% in some cases. 3.6% of $500,000 is just shy of 20 grand. That's a lot of money. Now, if you have a skilled VA loan officer and you have service connection at 10% or greater, then your skilled VA loan officer will make sure that your certificate of eligibility says exempt. And then, no funding fee.
Yep. If you guys, there's a lot of questions in here about how to get a hold of you. If you want to talk to us, here's what you're going to do. You're going to screenshot right now.
I don't know if that was a good idea.
And now you're going to zoom in for the phone number. And you're going to text us the platform that you're on. TikTok, Instagram, Facebook, YouTube, whatever platform you're on, text us that platform, and Lee or I will give you a call as soon as we're done.
Yep.
Okay? That's what you guys are going to do.
Cool. What do we got?
Black dot with the line, if I have a 1099 with the loss on my... Okay.
We did that one. Yep.
T, 15K down, no debt, 790 credit. I want a house with a big lot. What WFH, so location is flexible in SoCal.
I don't know what WFH is. What did you? Do you?
Adventures.
Oh, hold on. But 15K down, no debt, 70. I want a 15K. The most important thing is income. You didn't give me income at all. So I need income. The down payment is irrelevant. Okay. Whether you put zero down, 15,000 or 100,000, The income is the most powerful driving factor.
Yeah, let us know. Adventures, what's a bar minimum credit score to get a home loan?
Bar minimum. That's a very technical word. Bar minimum. If you're VA, doesn't matter. FHA, 500. 500. Bar minimum, 500. You are going to have to put down 10 to 20% on the property. But you wanted bar minimum, there you go.
Now, realistic?
Yeah.
580 and above.
Yeah.
Realistic. Do you do reverse mortgages?
Yes,
That's a
we
great
do.
question, Zippity TikTok.
Appreciate all the hearts. Thank you very
I've been
much
waiting
hearting
for
us
someone
up.
to ask
We
those
appreciate
questions.
you.
Reverse mortgages are such a powerful program for some, not all, but they are a powerful program. And what he's talking about is a program meant for people that want to buy a house or want to refinance that are over the age of 62. And what it will allow you to do is not make a mortgage payment if you choose not to. So, yes, we do. Screenshot us, give us a call.
62.
Ryan, I need a 5.37. What credit do I need? 800?
Yes. Simple.
Right.
Yeah.
User, whatever. 550,000 a year. 700 FICA. That's the question where you said, what's your income?
If you're $550,000 a year, you're probably at $1.5 million to start. But you go into a whole different category at that level. Once you get out of conventional conforming, the next category is called high balance, and then after that's called jumbo. When you get to jumbo, it's a very risky loan. So they want usually 20% down. Usually 20% down. So I think that was a 15K. So that doesn't even, you're not even close at that. 550K a year. 550K a year. Yeah, you're in the $2 million range, $1.5 million to $2 million. But we're going to be with the jumbo product. And the next question is, well, how do I not put 20% down? We can do something called an 80-10-10, which means we do 80% a jumbo loan, 10% a second loan, and then you have to put 10% down. But at that level of house, they want to make sure you got that much money. Because if you don't, you should not be buying a house.
You answer this one? 15K down, 90K income, 790 credit, no debt. SoCal, doable?
SoCal, oh yeah, all day long. All day long.
Let's do it.
Well, the 15K down is going to limit you because 3.5%, that's going to bring you up to about 450,000. The 90K will keep you right around there. So based on what you're presenting with no debt, you probably start about 450. Let's get you going.
All right. Christian Torres, what college did y'all graduate from?
Shoot, I graduated from the School of Hard Knocks. School of Hard Knocks.
Let me share something with you, Christian, because this is a lot of professions are like this, but it's a little different. And here's what it is. So in this profession, we actually have to teach ourselves. It's a little different, okay? Kind of like being a mechanic or something like that. We don't go to school and people don't say, here's how you do things. We actually have to learn the hard way, which in my opinion, for a lot of people, probably the best way. But that being said, we have to teach ourselves this business, and that's how we know so much, because we've been doing it and doing it and doing it and doing it.
Follow the host. Thank you. Follow the host. Thank you for the stuff. Heart us up. Give us the balloons. Put a mustache on this guy. Do whatever you need to. Let the algorithm know that we're trying to get you a house in 2024. Appreciate the hearts. Thank you very much.
FGTZ4444. Can I get a down payment assistance while using USDA? Also, how long does getting approved for DPA?
Okay, so USDA is zero down. So that's going to cover your down payment, okay? Now, USDA usually doesn't line up with the other DPAs, DAPs. The way you get qualified for a DAP is you get qualified for a regular mortgage, because DAP is a third-party application. And then we get you qualified for an FHA loan, and we plug in the third-party application. Like, for instance, if it's CalHFA, we plug in CalHFA. If it's Platinum, we plug in Platinum. If it's Shinoa, we plug in Shinoa. And that covers your down payment. Now, there are catches to all of these. Some of them, they'll forgive it. It's going to be forgiven. They're like, oh, I wanted that one. Yeah, but the interest rate is way higher, Platinum. So the interest rate is way higher. Well, some of them are a silent second, meaning you have to pay it back, CalHFA. So you have to pay it back upon refinancing or sale of the property. Some of them are staged forgiveness. After 5 years, we forgive. But you have a higher interest rate. Because if we go down payment assistance, we don't go through a regular pricing engine. We actually, like on CalHFA, we go to calhfa.gov, I think it is, calhfa.gov, and then we find out what the price is today and then make sure it meets the guidelines. So we approve your FHA loan, all approved, yay, then we're in escrow. Send it to Cal Halfa. Cal Halfa says, yup, we'll do it. Sends it back, and we fund the loan.
All right, One Stop Argentina. How can I buy my brother's house with the remaining balance?
The remaining balance. Okay, so I think you're talking about assuming a loan. Can you assume the loan? Yes, you can.
Well, maybe.
Yeah, maybe. There's a lot of caveats in there.
Yeah.
So sometimes, and these are FHA, VA, sometimes USDA, but rare. But so FHA, VA, and then usually not conventional conforming.
Yeah.
So you can assume them, but it's complicated and you have to go through the servicer.
Yeah, and assuming's the best if you can, if they have a low rate.
Yeah.
But here's another step if you can't assume. He could just sell you the house for what he owes. I mean, literally, that's what he could do if you can qualify, of course. And we'll be the judge of that, and we'll let you know. Mahogany Butte. What if you just started a new role? Can you still qualify for a mortgage?
Maybe. Actually, this is one of my favorites. I do this often. Somebody comes out of nursing school and they're like, they have to do their internship and everything, and then boom, they got a nursing certificate. And in California, there's some spots that'll pay you like $100,000 to $150,000 in some places for a nurse. $150,000. And they're like, yeah, I'd really like to buy a house, but I've only been a nurse for about a month. And I'm like, how long ago did you graduate? They're like, last month. And I said, how long were you in school? They're like, years. And I say, perfect. All I need is that 1 month. 1 month. 1 month. 1 month. This also happens to engineers. I got one that I'm doing right now in Texas. Came out of school, engineer, got hired by, I think, Tesla. And just big money. And they're like, yeah, but I've only just got like 4 months at the job. And I said, when did you graduate? They're like, about 5 months ago. And I said, with an engineering degree? Yep, done. Ready to go.
What if you just, that's the same one. Mm-hmm. Want to buy an investment property? I'll put 20% down, but I'm retired. Have a corporation set up. User 4154.
Let's do it. That's all I got to say. Let's do it.
Jen, when is the best time to call you guys? I told you, take a screenshot and text us the platform that you're on. TikTok, Instagram, YouTube, whatever you're on. Text us the platform. We'll give you a call as soon as we're done.
Can you finance it? We don't finance it. We provide financing for a borrower. So it's different. I need the borrower to qualify, and then the property meets the criteria.
What was the question of that one?
I don't know, but
down.
Yeah. I want to buy an investment property.
Have a corporation set up. Can he finance through the corporation, I think is the question.
I can finance a person, and then the property fits into the person's finance. But if you're saying corporation, that's a corporate loan. We don't do corporate loans.
How does it go buying a house without a driver's license? ID. Use your ID, man.
Yeah.
You don't need a driver's license.
We've done.
We don't care if you drive.
Don't care.
We just care that you can prove who you are.
We don't even care if you're a U.S. citizen.
No.
I actually am doing a loan right now for a non-U.S. citizen who actually told me at the beginning of the conversation, I don't want to imply that I'm trying to become a U.S. citizen. I said, what? All right, fine, okay. And then I actually went to the underwriters and I'm like, okay, this is a special visa and they want to make sure that they're not trying to imply to become a U.S. citizen. And this is another person that got hired from a tech company. They got hired from, I forget where they got, India. They got hired from India and they got brought in by Microsoft and they're paying them big bucks. And they said, no, we're on I think it's a 797 visa. I might be wrong on that. But I looked at the visa, I looked at the guidelines, and I said, yeah, this works perfectly fine.
Ryan, we kind of addressed this earlier, but we'll recap really fast. What about a 3-2-1 that builder is offering? Is it worth it? 3-2-1 buy down.
You do it.
Okay, so it's up to you to make the decision, but here's going to be the recommendation that we make, okay? You're going to buy the house for whatever they're selling it for. They're going to give you money towards the 3-2-1 buy down. They're going to give you money. They're going to give you concessions, 10 grand, 20 grand, 30 grand, however much that money is. There's a lot of money in it right now, guys. And you're going to want to take that money and say, apply it to the purchase price. Purchase price, lock that in because you're always going to buy it for cheaper. If you want to do the rate, that's fine, but just know that rates are supposed to be coming down this year based on what the Fed's putting out. So the rates are going to be down by the end of this year probably. Beginning of next year, you would refinance then, lock in the lower price, lock in the lower payment, best of both worlds.
By the way, this is it's a perfect time to buy because we do anticipate the rates going down. That's not us guessing. That's us watching the Federal Reserve. You can watch them too. They're on the news.
You're allowed
Put it on
to.
YouTube.
He gave you permission.
Yeah, I gave you permission to watch them.
Watch that.
They're on YouTube.
You're a nice guy.
I know.
Not good looking, but nice.
I know. I actually, on our website, we put fun links to follow, and there's a few people that I follow that I listen to, And if you watch these people, you go, oh, I got a good feeling for the economy. It's pretty good. So we believe third quarter, things are going to start screaming. That's a long time from now. But if you're buying, right now is a good time.
Not really, man. January's over.
Dude, there's no January.
January was like, bam!
January's in the history
That
books.
was a tough year, I'll tell you that. January
Yeah.
was a tough year. My side chick don't need anything nice.
All right. Yeah,
Happy for her and
good for you. Yeah.
Lex, if I get a second job now, can I count it as income to buy in the next 3 months?
Lex, no.
Oh, there's your answer.
Yeah, no.
Why?
no.
What does he need? What does he need?
Well, here's the thing. The underwriters know you might get a job to try and qualify for a house. Can't let that. Because then once you lose that job, you don't qualify no more.
Mm-hmm.
How do you prove that you can do this? Well, you do it for 2 years simultaneously without a break.
Nice.
If you do 2 jobs simultaneously without a break, you qualify. I actually did a nurse about a year ago that had 2 full-time jobs. And I was like,
busy chick.
It was a dude. Weird. So, you just take me off
Dude,
track.
just answer
man.
the questions.
Dude, you just took me off
That's
track.
all you have to do.
And he went from one hospital to another hospital and was buying a house, and they're like, we don't believe this. And we had to pull the full VOEs from both hospitals and showed, yeah, he's like, yeah, I just work here, and then I go here, and then I go home, and then I go here, and then I go here. I'm like, and you've been doing this, he's been doing it for like 4 years. And the underwriter's like, yeah, he's doing it. He can afford it. Bought a badass house.
All right. Thank you guys for following us. Thank you, Rajvinder, for sharing.
We appreciate
Team
you,
Sanchez.
Rajvinder. Team Sanchez.
Who wants to hear about the aliens, man?
Dude, aliens.
hear about the
I
aliens.
don't know.
Liz, we're available right now. All you have to do is text us the platform that you're on.
Yeah.
And we'll give you a call as soon as we're done. Our phone numbers are right here. Screenshot and zoom in. If this isn't working, guys, please let me know if you can't zoom in on those phone numbers, and I'll correct it for you guys. I'm just trying to play with things and figure out if it works, okay? Jay, what's the average interest rate for a DSCR and a 620 credit score?
First off, Jay, you're not going. It's not going nowhere.
0.
Dude, yeah, 0.
Or
Jay,
a million.
Let me tell you why. Here's why. A lot of people, they want to get involved and they want to be real estate investors. That's my way of making real estate investors. I want to be a real estate investor, but you don't know anything about real estate. So they're like, well, well, I'll just buy stuff. Yeah, you buy stuff if you got money. If you got money, and if you're trustworthy with credit. How do we figure out if you're trustworthy with credit? FICO score. DSCRs start at
680, I think.
Yeah, 680.
I'll have to verify that
680. It is 680. So 680. So DSRs start at 680 and 20% down. No, there's no 3.5% down. No, there's no 5% down. There's an occasional 15% down. Occasionally, but it's a one-off. It's a strange one-off, and you better have an 800 FICO score. So if you're trying to invest, if you're trying to become a real estate mogul, investor, or whatever, hats off to you. I hope you do. I want to help you. I want to be your lender doing it.
Yep.
You'll never be able to do it with a low 600 FICO score. Get that FICO score up. Let's get you to own a bunch of properties.
Yeah. No, Connor, you're the stud.
You're the stud.
DIRG, 60K, no debt, 720 credit score.
No debt, probably 320, 330,
Nice.
somewhere in that range, depending on tax base.
Rajvinder, give us a gummy bear.
We got a gummy bear.
I love
dude.
gummy bears.
Gummy bear in California.
And the red one,
gummy
too.
bear means something different in California.
What
than
does it mean?
In California, it means that you're gonna get on a trip.
Oh, I want some
Yeah,
gummy
I
bears.
want some gummy bear. Rajvinder just gave you a gummy bear,
Nice.
dude. She
Kristen
wants to
followed
send
the
you on a
host.
trip.
That's good.
She wants to send you
Is
on a trip.
USDA strict on DTI?
DTI, yeah.
All of
DTI,
them
yeah.
All of them are. Unless you're going with non-traditional financing, all of them are. Bernice, I just got laid off. What can I get unemployed with that count? Will that
Nope,
count?
nothing. Absolutely
Nada.
nothing.
Nada?
You know why? Here's why. Because unemployment has an end. If I start a job at Intel or Ford or wherever, if I start a job, there's no real end to it. I get to work there. Unemployment is like for, 13 weeks or 26 weeks or something like that. And there's an end. You're going to run out of income.
Okay.
No way we can use unemployment. No way.
But if she gets a job with a gap less than 6 months,
Yep.
you could buy her after that first paycheck.
But I just caught myself. Let me step on that just a little bit. If you have a way, I did a loan for a hot shot. Those are the guys who, smoke jumpers, they jump into forest fires. And he works 6 months out of the year and crazy hours when he works and crazy money. And then when he's done, he files for unemployment and he makes a little bit of money on unemployment. And then next year when fire season starts, he goes back in, fights fires, makes $150,000 inside of 6 months, and then goes on unemployment. Well,
cool
if I
gig.
can prove the way that you make your income and it does involve unemployment, at that point I can use it.
So if you have a history of using unemployment yearly, you could use it.
And in California, we have like people that are in the movie business. They'll get a job, they're actors or screen
Craft services.
craft services, and they make a lot of money for 3 months, and then they go unemployed for 2 or 3 months. They get another job, and that's the way their life is. So we factor all of that in. The underwriters are pretty smart. They do hundreds, if not thousands, of loans every month, and so they can figure it out.
Yeah, they can. Ryan, what do you know about NFL contract financing?
I know that if you're an NFL player and you got a contract, I want to finance you. I know that much.
There you go.
Yeah.
All right, Zazazoo, peace out.
Peace out. We're here for you.
Zazazoo, I like that name.
All right, cool.
Liz,
Yeah.
I was approved for only $400,000 in Orlando. I feel like it's too low. $82K a year, zero debt, 799 FICO. You think we can beat that?
We could try.
What
We could
about
damn
this?
sure try.
What does it say here?
Okay, give me a second. How much?
He's going to do some math.
I'm going to do some math real quick.
They
What's
did
the income?
82 G's a year.
82
82 and a half to be exact.
400.
All right, guys, he's going to get it.
Yeah,
Ooh,
we
there?
might be able to beat it a
We
little
there?
bit, but you're kind of in that range. You're
Okay.
kind of in that range. I might go 410, maybe 420.
What?
Maybe,
She's
maybe.
selling a home with 100K down.
Oh, that's different. Oh, that's the loan amount. Purchase price is different. But if you sell that 100K down, maybe we use the 100K down, or maybe we create a SPIA, give you an extra stream of income, increase your income, increase your buying power. Boom, you're in.
Boom. So we can get higher than that. Kuru, what's the average rate for someone with excellent credit?
There is no average rate, Kuru. There's no average rate. But there is the rate that New American Funding is putting out on the website, and that's 5.25.
What?
5.25.
Say that again.
5.25
Badass.
for a 15-year fixed. 5.375 for a 30-year fixed.
All right, there you go. Kuru, give us a call. For any of you that want to get in touch with us, screenshot our phone numbers right there. Zoom in, text us, and then we'll get back to you. 12 Guerrero. I left the job, came back within 2 years. Could I qualify for the same job? With the same job?
So the guideline says that if you left for more than 6 months, that you have to be back for 6 months.
There you go.
So yes, the answer is yes. You don't have to get the full 2 years. If you went back to the same job, then the guideline says that after you've been there 6 months, I can qualify you. There are some exceptions. If you left for the Navy or the military and you came back, no matter how long you were gone for, the day you come back, qualified. If you gave birth and you used the program, what's that program? Help me.
I don't know, man. What are you talking about?
The-
FMLA?
Yeah, FMLA.
Okay.
If you use the Family Medical Leave Act and you went away for 6 months to 9 months and then you came back, the day you come back.
Wow.
Yep.
Jay, can I go from a 620 to a 680 in 6 months?
You can go from 620 to 680 in 30 days.
You can probably get to 800 in 6 months, man.
Yeah, you can go to a 680 in 30 days. There's a lot of hacks, Jay.
Call us.
There's a lot of hacks.
Screenshot. Norvig. I'm 15 days away from closing date. Underwriter's asking me for more documents.
Yeah, I know. That sucks, Norvig. It's the process, man.
Yeah. Is it traditional financing?
Every single loan I go through, I'm like, hey, this is going to be easy. No, they're never easy. They're never easy, but we do them.
Yeah. 660 credit. Hey, man, you're ready. Let's do it. Bernice. So, sorry, got called, so was doing data entry, but got laid off yesterday and now applying unemployment. Will that amount count? So this is the same question.
Yeah.
So unemployment, no.
Doesn't gap, no.
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 But you got laid off yesterday, which means you can have a job very soon, and we can use that new income.
Yep.
So-
And get a job as quick as you can, Bernice, if you're trying to buy a house, because the shorter the gap, the underwriter's going to go, yeah, shit happens, but you're employable, so we'll take you back.
Okay, that's a good one. 660 credit, 125,000 combined income. What can I buy?
I'd say you're starting at about 550-ish, no debt.
That's nice.
No debt, 550, and that's going to depend on tax base and insurance nowadays. Insurance is changing things a lot.
Yeah, they are. Evolutionary frequency, high DTI, 600 credit score, combined income of 79,000. Was looking at USDA loans. All right, you gonna call us?
Yeah,
Call us.
yeah. USDA, Gus underwriting system, government underwriting system, Gus.
Being Julie 03, how long does it usually take to get pre-approved and start actively looking to buy a home? Good question.
So being Julie 03, I like that. What are you doing?
Being Julie?
I'm just being
03?
Julie. I'm just being Julie over here. Just being Julie. Hey Julie, being Julie. Hey being Julie. If you called right after we got off this live and you said, "Hey, I want to offer on a house tonight."
Ooh.
Tonight.
Wow.
Tonight.
E.
And I'm willing to get you all the documents in the next hour.
All of them?
All of them. All of them. You can't give me 90% of them. All of them. I'd have you pre-qualified before tonight.
Dang! So if it's 11 p.m., call Lee.
No, call him.
Number's right there. Bernice, also, when you buy a house and let's say your monthly payment is $4,000, will it always stay the same?
Bernice, if you got a adjustable rate mortgage, it's not going to stay the same. And if you got a fixed rate mortgage, it's not going to stay the same. What? Okay, adjustable will adjust based off of the, most cases it's the LIBOR, but now they're going to the Russell 2000. So every year, like if you got a 5-1 arm, then for 5 years, it's fixed. And then after that, every year, it'll adjust. So it's going to change. That's either good or bad. Most of the time, it's not good. The fixed rate sounds like, oh, it's never going to change. And the mortgage won't. The mortgage won't. But the payment will. The reason the payment will is every year your property tax goes up in value. They reassess yearly, and then they send it to the mortgage company and they say, hey, this person used to pay $200 a month. Now they have to pay $250. And the mortgage will then, your mortgage payment will go up $50 to accommodate the property taxes.
So actually, to clarify that, your mortgage doesn't go up. Your taxes went up, and it's part of the mortgage payment.
All right.
So I got a 4.025 in 2023.
Congratulations.
I don't know if I believe that. And if I do, how? How did you get that? Buy down, new build, what'd you do? Being Julie. And how long do you get pre-approved? How long is that good for?
Usually most lenders will say 90 days, which is true. It's kind of 90 days, but we'll just refresh. If we're at the 90-day mark and like, oh no, I'm done being pre-approved. No, you're not. I just do a refresh credit pull to make sure that you haven't gotten any new debts. Make sure your job's still there, and we're good to go as long as you need it.
Hey, can someone screenshot this and tell me if they can zoom into those phone numbers and they can actually see them? Somebody, please. Bernice back. Oh, okay. Thank you. I'll start looking. Thank you.
We're here for you, Bernice.
SJ, what's the highest DTI ratios for an FHA? And can you guys do it? That you guys can do.
That you guys can do. Well, it's not whether we can do. Well, actually, you know what? If you're a brand new bank and you're not FHA direct, there's overlays that don't let you go that too far. But if you're FHA direct, we're New American Funding. We're in all 50
direct.
states.
VA direct.
All 50
Fannie
states.
direct.
All 50
All
states.
50 states.
So the guideline says 56.999999. That's all loan officers. That can go direct. If you're a broker or if you're a lower level bank, you have an overlay and you can't.
GOA, how much do I have to have
yes,
saved
we can.
up? Yeah, there you go.
Yeah.
How much do I have to have saved up for a $330,000 house, first time home buyer?
Well, if you go with GOA, I knew a guy named GOA. So if you are a first time home buyer and you went FHA, probably about 10 grand. About 10 grand, that's because 300,000 is roughly 10 grand, 330, roughly 10 grand.
Our GOA had very nice hair.
Very nice hair.
Use the good moves.
Very nice hair.
Alexis Cortez, my boyfriend got a FHA loan in October 2023 for parents. When can he buy another home with me? You're going to start a fight, bro.
Yeah.
Go for it.
You're not going to like this one, Alexis. You're going to be kind of mad. You're going to be big mad. You're going to be big mad. Pretty big mad. If he went on as an occupant co-borrower, can't buy one with you. If he went on as an occupant co-borrower, he can't. Because FHA only allows you to have one loan that you're the occupant for. There's a possibility that he's a non-occupant co-borrower, in which case maybe, but you're going to be the primary. So it's a little strange because FHA is designed to help somebody get into a house, not build a real estate portfolio. So
Wow.
Could it be? Maybe.
I'm up for the challenge, though.
Yeah, we'll try it.
Give
We're
us a
gonna try it.
call. What's the least amount you could put down on a duplex? Good question.
That's a very good question. Very good question.
I'll let you know when they're good questions.
3%. Wow. Actually, no, 0. I can do a DPA, right? Yeah, I can do a DAP on a 0. I can do a DAP.
This guy's dude, can you do less?
What?
Can you give me money back if I buy a house?
Okay, give me money back.
That's what I'm looking for now. So the answer is right, 0. If you go with the right program, you can buy it with 0 down. Do you help with DSCR loans? 805 FICO? I have 20%. Polo.
Do it. Let's
Polo.
do
The
it.
answer is yes.
Yeah, we'll do it for you.
Yes.
Yeah,
Bernice
DSCR loans
shared
will
the
do it.
live. Thank you, Bernice.
Thank you, Bernice.
The earth is not flat.
I don't know.
Prove it.
I don't know. I used
Prove
to think it
it.
was round 2. I'm not so sure anymore.
Prove it.
I've been lied to so much by the system, the government, everybody, and they don't even know they're lying. But Yeah, I don't know.
Do you have a good broker for a business rental loan for seasonal work to be approved?
Business rental loan. I don't.
Okay. Minimum score for VA.
No requirement.
Ooh, what does that mean?
It means you can have. Doesn't matter what your FICO score is.
What?
Could be a 480. Doesn't matter.
What? Moon is round, sun is round.
But it's a residual driven loan, which means the FICO score will factor in, but it's not a disqualifying factor. And if you have a 480, you earned that 480. So whatever you did will get factored in. But technically, no requirement on a VA loan.
We are in a total different dimension that we used to be. I'm there with you.
Yeah, it's a little strange. I know it's all creepy and weird,
there
but
with you.
it's a little strange.
I have lucid dreams too, man.
Yeah.
Bernice,
That's
have
a
they
good
passed the credit
question.
tax for kids yet?
That's a good question.
Look at Bernice coming with the good ones.
That's a good one, Bernice.
But
I'm
here's
not
the
gonna lie.
truth.
That's
You're
a
gonna have
good
to
one.
call us because
Yeah.
I'm out.
That's good. Yeah.
You ready?
What? Well, I'm gonna answer that real quick.
All right.
Hey, Bernice.
We'll see you guys.
It looks like they're going to, and the one thing that they did say, the IRS came out and said, if we do pass it, we'll retroactive it for every taxpayer. So you don't have to wait to file your taxes to see if it passed. I don't think it's made it through the House yet, but it's going to be good for people that have kids no matter what. We've been Chris and Lee. We appreciate you guys. We are out.
Screenshot that and call us if you have more questions or text us. Bye.